What if I told you that reaching $100,000 before your 30th birthday isn't just about the money? It's about rewriting your entire future. What if hitting that one number early could buy you more than just financial security? What if it could buy you time? Time to breathe, time to think, time to live life on your own terms instead of constantly playing catch-up. It's not just a number in your bank account. It's a signal to the world and to yourself that you're not here to survive. You're here to win. Now I get it. $100,000 by 30 sounds like a fantasy for most people. Rent is high, student loans are real, and avocado toast isn't getting any cheaper. But what if, just what if, you made that your goal? What if, instead of chasing the next iPhone or the perfect vacation selfie, you put your energy into stacking that six-figure safety net before you hit 30? Here's what would happen. Your entire financial life would shift. The game would start working in your favor decades before it does for most people. The anxiety about money that plagues so many adults into their 40s and 50s, you'd dodge it. The paycheck-to-paycheck cycle that traps millions, you'd escape it. And best of all, you'd be in a position to build wealth effortlessly because you started early when time was still on your side. Let's break this down. $100,000 by age 30 might sound like some millionaire YouTube guru fantasy, but the math tells a different story. It's doable, and it's worth chasing. Let's say you start at age 22, right out of college or trade school or wherever life took you. That gives you 8 years to save and invest your way to $100,000. Simple math? That's $12,500 a year, about $1,042 per month. Now maybe you're thinking, there's no way I can save that much. Fair. But what if you broke it down even further? Let's say you can only start with $500 a month. That's $6,000 a year. But if you invest that consistently with a 7% annual return, you'd hit around $68,000 in 8 years. Not bad, right? But here's where it gets interesting. Let's say you slowly increase that amount, maybe by picking up a side hustle, getting a raise, or living below your means. If you bump your contributions from $500 to $700, then $900, suddenly you're closing in on that six-figure mark. Not by being a genius, not by being lucky, just by being consistent and early. And that early start is the real advantage. Most people don't start saving seriously until their 30s or 40s, when they have kids, mortgages, and a whole lot more financial weight on their shoulders. But you're front-loading your financial life. You're doing the hard part first, which means you get to enjoy the easy part sooner. Imagine turning 30 and having a $100,000 portfolio. Now imagine you never add another dime to it. Let's say you just let it sit and grow, untouched, for the next 30 years. With a 7% average return, that $100,000 becomes $761,000 by the time you're 60, without doing anything. Now imagine you keep investing. Keep growing. That $100,000 becomes the foundation of a seven-figure portfolio before most people figure out how compound interest even works. That's the power of starting early. That's what $100,000 by 30 really means. But let's keep it real. The challenge isn't just financial, it's emotional, it's psychological, it's cultural. We live in a world that tells you to treat yourself, to spend your 20s living your best life, to figure it out later. But later comes faster than you think. And the people who get ahead, they're the ones who figured it out now. What if I told you the biggest thing stopping you from hitting $100,000 by 30 isn't your income, your job, or even your bills? It's your brain? That's right. The real barrier isn't financial, it's psychological. It's the quiet little voice that says, you've got time. Or worse, it's too late. But here's the twist. Those thoughts, they're not facts. They're habits. And if you can change the way you think about money in your 20s, you can change the way you live in your 30s, 40s, and beyond. Let's break it down. The truth is, most people won't reach $100,000 by 30. Not because they can't, but because they're stuck in one or more of these 5 mental traps. Trap 1. I'll start saving when I make more. This one's a killer. You're 24, making $45,000 a year, and you think, what's the point of saving now? I'll wait until I make real money. Here's why that thinking is dangerous. The amount you save matters far less than when you start. A 25-year-old who invests $200 a month for 10 years and then stops completely will retire with more than a 35-year-old who invests $200 a month for 30 years. Why? Time. Early dollars work harder than late ones. Waiting to make real money just delays your future. You don't build the habit, and you lose the most valuable asset you have in your 20s, compound time. Trap 2. I'm young, this is my time to spend. Listen, you should enjoy your 20s. This isn't a live like a hermit and never leave your apartment speech. But too many people treat their 20s like a never-ending festival. They say yes to every trip, every brunch, every concert, every overpriced cocktail that tastes like cucumber and regret. The problem isn't enjoying life. The problem is basing your lifestyle on what your friends are doing, not on what you actually value or can afford. You don't have to cut joy. You just need to be intentional. Trade 5 nights out for 3. Make 2 trips a year instead of 5. Redirect the difference to your investments. Keep enjoying life, just on your terms. Trap 3. I have debt, so I can't save. Student loans, credit cards, car payments, they feel like weights dragging you down. And yeah, they're real. But don't let them be an excuse to do nothing. Even if you can only save $50 a month, do it. Why? Because the habit is worth more than the dollar amount. Getting into the rhythm of saving and investing early, even in small amounts, sets you up for massive gains later. You can pay off debt and build wealth. You don't have to choose. Trap 4. Investing is too risky. This one's rooted in fear. Maybe you saw your parents lose money in 2008. Maybe crypto volatility scared you. Maybe you think the stock market is basically gambling. It's not. When done right, meaning diversified, consistent, long-term investing in index funds, the risk is minimal compared to doing nothing. Because here's the real risk. Waking up at 45 with $0 invested starting from scratch and realizing you missed the compounding train. Trap 5. I don't know where to start. This trap is totally fair. The financial world can feel like alphabet soup. Roth IRAs, ETFs, HSAs, 401ks. But paralysis by analysis is just another excuse. You don't have to know everything. You just have to start. Open a Roth IRA. Set up an automatic $100 per month transfer. Throw it into a total market index fund. Boom, you're investing. You can learn as you go, but you've got to go. Here's the truth. You don't need to be a genius to reach $100,000 by 30. You just need to be different. Most people in their 20s spend like they're rich and invest like they're broke. Do the opposite. Spend like someone building wealth. Invest like someone who believes in their future. All right, no more theory. Let's get into the playbook. The real steps that take you from wherever you are right now to $100,000 by age 30. Whether you're 22 and just getting started or 27 and thinking, I'm kinda behind, this plan can work. The catch? You've got to stop playing defense and start playing offense with your money. Here's how. Step 1. Know your number. We're aiming for $100,000. But depending on your age and how many years you've got before 30, your monthly target will vary. Let's say you're starting at age 22. You've got 8 years. That's approximately $1,042 per month. Age 25, 5 years left. You'll need about approximately $1,500 per month. Age 27, just 3 years. You'll need approximately $2,250 per month. Sound intense? Maybe. But here's the trick. You don't need to start at those numbers. You just need to build toward them. The most important thing isn't hitting a perfect number, it's building momentum. $100,000 is a moving train. You don't have to be on the engine, just get on. Step 2. Earn like it's urgent. Let's be honest, saving money on a $36,000 salary is a different ballgame than saving on a $70,000 salary. The best way to hit $100,000 faster is to raise your income. Ways to do that. Ask for a raise. Use sites like levels.fyi, Glassdoor, and Payscale to research your worth. Switch jobs. The biggest salary jumps come from moving companies, not staying loyal. Freelance or consult. Can you write, code, design, teach, edit videos, manage social media, deliver or flip? Uber, DoorDash, Facebook. Marketplace flips. It's not glamorous, but $500 to $1,000 per month in side income can shave years off your timeline. Even earning $200 extra per week gives you $10,000 a year to throw towards your goal. The goal isn't to hustle forever. It's to hustle now so you don't have to later. Step 3. Build a budget you can actually stick to. We're not doing spreadsheets with 47 categories and color-coded coffee spending. We're keeping it simple. 1. Essentials, 50%. Rent, groceries, insurance, transportation. 2 goals, 30%. Investments, savings, debt payoff. 3. Fun, 20%. Restaurants, streaming, anything you don't need but still enjoy. Flip it if you want. Aim for 30 to 40% to savings, study, investing if you're trying to sprint to $100,000. Track every dollar for 1 month. That's it. You'll immediately see where the leaks are, subscriptions you forgot about, eating out more than you thought, buying things Amazon swears you need but your future self doesn't. Step 4. Destroy bad debt before it destroys you. Credit card debt is wealth poison. Pay it off aggressively. High-interest debt greater than 10% should be your first target, even before investing. Why? Because no investment can consistently beat a 22% credit card interest rate. Use either the snowball, smallest balance first, or avalanche, highest interest first method. Automate payments. Channel your side hustle money straight into it. Once it's gone, you'll feel like you just got a raise. Step 5. Automate your investments. No one builds wealth by accident. You need to set your systems on autopilot. Here's what to do. Open a Roth IRA. Contribute up to $6,500 per year in 2025. Use a brokerage account if you max that out. Invest in low-cost index funds like VTI, VOO, or FXAIX. These cover the whole market and don't require you to pick winning stocks. Set up automatic transfers. Pay yourself first, not with the leftovers. Start with $100 a month if you must. Double it next month. The goal is to make saving so automated that you don't have to rely on willpower. Step 6. Treat $100,000 like a mission, not just a goal. Your 20s are noisy. Everyone wants to pull you in different directions. Brands, social media. Friends who mean well but spend like tomorrow doesn't exist. You've got to stay locked in. Keep a reminder in your wallet. Put a sticky note on your mirror. Track your net worth like it's your gym progress. This is your wealth transformation arc. Not because money is everything, but because freedom is. And $100,000 is your first real taste of it. Let's get specific. You've got the goal, $100,000 by age 30. You've got the mindset, the hustle plan, the budget. Now it's time to answer the question that's been hanging over your head since part 1. Can I actually get there in time? Short answer, yes. Long answer, let's map it out and run the numbers. Whether you're starting at 22 with time on your side, or 28 thinking you're late to the party, there's a timeline that works. You just need to choose how aggressively you want to play. Scenario A, starting at age 22. You've got time, use it. If you're 22, you've got 8 full years before you hit 30. This is the slow burn advantage. Even small moves compound like crazy. Let's say you invest $500 a month, earn a 7% average annual return. By age 30, you'll have around $65,000 to $70,000. Now increase your contribution slowly each year, $50 a month more every year, and you close the gap. By year 8, you're contributing $900 a month. Now you're knocking on the $100,000 door without ever making painful lifestyle sacrifices. Moral of the story? Start early and even small numbers stack fast. Scenario B, starting at age 25. 5 years, let's go? This one's common. You're mid-20s, stable income, but no real savings yet. To hit $100,000 by 30, you need to save and invest about $1,500 per month. Sounds big? Sure, but remember, A job switch could boost income by $8,000 to $12,000. A side hustle earning $200 per week equals $800 per month. Trimming $300 to $400 per month from lifestyle inflation, rent, food, car. Put it all together, and $1,500 a month becomes possible, even without living in a tent. And if you're thinking, I can't do $1,500, but I can do $1,000. Cool. You'll hit around $75,000 by 30. Still huge. Still ahead of 90% of people your age. Remember, $75,000 by 30 is still elite. The goal isn't perfection, it's acceleration. Scenario C. Starting at 28. I only have 2 years left. Okay, you're 28. You've got 24 months to stack serious cash. Let's not sugarcoat it. This is going to take focus. To reach $100,000 from zero, you'd need to invest about $4,000 to $4,200 per month. That's a tall order, but here's what is possible. Save $2,000 to $2,500 a month. You'll hit $50,000 to $60,000. Add a windfall, bonus, tax refund, inheritance, side income, and you can close the gap fast. Invest aggressively. Higher risk, yes, but growth is on your side. And here's the truth. If you go from $0 to $60,000 plus in 2 years, you're a beast. That's momentum that carries you to $200,000 by 35. So don't focus on what you can't do. Focus on what you can still do. Because you'd be surprised what a focused 24 months can do to change your life. But wait. Doesn't the market go up and down? Yup. And you're not going to time it perfectly. That's why we're working with averages, like 7%. Some years your investments might gain 10%. Some years they might lose 5%. Doesn't matter. What matters is that you stay in the game. You keep contributing. You don't try to outsmart the market. You let time and consistency do the heavy lifting. And here's a cool bonus for starting in your 20s. You can afford to invest more aggressively. You've got time to recover from dips. So while the average investor panics in a recession, you stay cool and buy the dip. Because you're thinking years, not months. Choose your speed. There's no right version of this. You pick the path based on where you are and how hard you want to push. Want a slow and steady approach? Start now with $500 per month and increase each year. Want a focused sprint? Stack $1,500 to $2,000 a month for 3 to 5 years and hit the goal hard. Starting late? Fine, you'll sprint harder, but it's still doable. The key is starting now. Every month you wait is one less month of compound growth. And time is the only thing you can't get back. Let's say you did it. You reached $100,000 by the time you turned 30. Maybe it took years of grinding. Maybe you had a lucky break or two. Or maybe you just stayed consistent and made smart decisions while everyone else was winging it. However you got there, the important thing is you arrived. Now the question becomes, what does life actually look like on the other side? Because here's the truth that most people miss. $100,000 isn't just a financial milestone. It's a life-changing threshold. It marks the end of one phase and the beginning of something entirely different. 1. You think differently about every dollar. Once you have $100,000 in your investment account, something clicks in your brain. You stop thinking in terms of, can I afford this? You start thinking in terms of, what is this costing me in future freedom? That $500 weekend trip? You start seeing it as $3,000 less at retirement. That $100 impulse buy? You know that could have been $500 if you'd invested it instead. You're not being stingy. You're being strategic. Because now every dollar has a job. Every dollar has power. That's what changes. It's not about being cheap. It's about being deliberate. 2. You have room to breathe and think. If you've ever lived paycheck to paycheck, you know how mentally exhausting it is. Your brain never shuts off. What if I get a flat tire? What if my rent goes up? What if my job lets me go? But with $100,000 in investments or savings, you sleep differently. You can absorb hits. You can take a break from work. You can say no to things that don't serve you. Most importantly, you start making decisions based on long-term gains, not short-term survival. That's a luxury most people don't have. And you bought it by being disciplined when it mattered most. 3. You have career leverage. This one's massive and rarely talked about. When you have $100,000 in the bank, you no longer have to say yes to a toxic job. You can take a lower-paying position that gives you more time or peace. You can start that business you've been daydreaming about. You can freelance, take a sabbatical, or finally go full-time on a side hustle that's showing potential. Money in the bank gives you career leverage. It's the difference between, "I have to take this offer," and "let me think about it." It's not about quitting your job and sailing into the sunset. It's about options, flexibility, choice. 4. Your money starts making money. We've said this before, but it's worth repeating because this is where the real transformation begins. At $100,000 invested with a 7% return, your money is earning around $7,000 per year. That's roughly $580 per month, money you didn't lift a finger for. Let that sink in. Your portfolio is now a mini employee, working while you sleep. You're building wealth without doing anything. And that $7,000 gets reinvested. It earns its own return. Then that return earns another return. This is the beginning of the snowball. And if you just leave it alone, in 5, 10, 20 years, it becomes an avalanche. 5. You stop competing with everyone else. Here's a weird side effect of building real wealth early. You care less about showing it off. You stop buying things to impress people. You stop feeling FOMO when friends blow money on stuff they can't afford. You don't need validation because your confidence comes from security, not status. You know you're winning, quietly, consistently, powerfully. And that confidence, it spreads to other areas of your life. You start thinking long-term in relationships, career moves, personal growth, because you've tasted delayed gratification, and it's delicious. 6. You've built a financial identity. This is maybe the biggest reward of all. Once you've reached $100,000, you become the type of person who builds wealth. You've trained your brain to see opportunity. You've built habits most people never master. You know what works and what doesn't. And from here, it only gets easier. Not because the world gets easier, but because you're better at playing the game. You've leveled up. So what happens next? That's up to you. Some people go for $500,000. Others chase freedom. Some want to retire early. Others just want to stop worrying. But one thing's for sure, you're not like everyone else anymore. You made moves when others made excuses. And now you're in the driver's seat. So you did it. You crossed the line. $100,000 by 30. The average American doesn't reach this milestone until well into their 40s, if they ever reach it at all. You hit it early. You sprinted while others strolled. And now you're standing at the edge of something much bigger. Because here's the truth. $100,000 isn't the finish line. It's the on-ramp to wealth. And what you do next determines whether you coast into comfort or accelerate into freedom. Let's talk about how to use that first $100,000 to build real, life-changing generational wealth. 1. Keep the system running. Don't stop now. Don't get comfortable. Don't treat this like a destination. The system that got you to $100,000, keep it going. Keep your auto investments running. Keep your spending disciplined. Keep your income growing. Keep tracking your net worth like your life depends on it. The biggest trap people fall into after reaching a big goal is relaxing too hard. They take their foot off the gas. They go from hungry to lazy. They stop doing the things that made them successful. Don't be that person. You're in the compound zone now. The math is finally working for you. The engine's warm. Let it run. 2. Upgrade your financial strategy. Now that you've got capital, it's time to think strategically. At $100,000, you're no longer in basic budgeting mode. You're in asset optimization mode. Here's what that might look like. Max out retirement accounts, Roth IRA, 401k, HSA. Diversify your portfolio. Maybe you start learning about REITs, bonds, or dividend stocks. Consider tax efficiency. Learn how to structure your investments to minimize taxes legally. Explore real estate or entrepreneurship. At this level, you've got leverage. You can start playing offense in a whole new way. You don't need to do everything at once, but you do need to evolve. Because the same strategy that got you here won't necessarily get you to $1 million. Growth requires adjustment. 3. Focus on multipliers, not maintenance. At this stage, your wealth building isn't just about saving more, it's about thinking bigger. Can you build a business that earns while you sleep? Can you invest in scalable assets? Can you mentor others and build networks that bring new opportunities? When you're broke, you think in terms of dollars. When you're growing, you start thinking in systems and leverage. That's what wealthy people do. They don't trade time for money, they build machines that print money with or without them. That could be real estate. That could be a YouTube channel. That could be owning equity instead of selling labor. You don't have to go full entrepreneur, but you should start thinking in multiples, not just margins. 4. Use your wealth to design your life. This is where it gets good. Because once you've got your first $100,000 and your systems are in place and your income is growing, you unlock the ultimate cheat code: design. You can now begin crafting a life that fits you, not one you're forced into. Want to travel for a month every year? You can. Want to go part-time at work and focus on your passion? You can. Want to start a family, buy a house, move cities, or build something big? You've got the financial runway to do it. Money doesn't buy happiness, but it buys options. And options are how happiness is built. That's what this entire journey has been about. 5. Pay it forward without losing focus. Now that you've reached this point, people will start asking you how you did it. Don't gatekeep. Don't play humble. Don't brush it off like it wasn't a big deal. Because it is a big deal. You cracked the code early, and others need to see that it's possible. Especially people who feel behind. Especially people who think they'll never catch up. Especially people who never learned any of this growing up. Share your story. Share your systems. Teach others what you wish someone taught you and keep learning. Stay hungry. Stay curious. Because $100,000 is just chapter 1. And trust me, chapter 2 is way more interesting. Final thought. Reaching $100,000 by 30 is rare. It takes discipline, consistency, and clarity. But the reward isn't just the money. It's the identity shift. You've proven that you're not a consumer. You're not someone who waits around hoping things get better. You're a builder, a long-game thinker, a player in a world full of spectators. And while everyone else is out here trying to look rich, you're actually becoming wealthy. Slowly, quietly, intentionally. So here's to the first $100,000, and here's to everything that comes next. Because now you're not just on the path, you're ahead of the curve.